What's up, everybody? This is Kevin with Real Estate Informed, and today I want to talk about this real estate crash and this real estate bubble and how long it'll go for. First thing I want to as I drive to the gym this morning, the first thing I want to that's on top of my mind is a lot of videos out there about real estate gurus talking about when the crash is going to happen. When's the crash going to happen? It's going to happen in 2021. We're looking at this. We're looking at all this data. When's the crash going to happen? Man, I don't want to be like an alarmist or anything or whatnot, or just say that there isn't going to be a crash. But I do want to say that they've been saying, like, there's YouTube videos out there from 2015 of real estate gurus saying that the crash is coming, the crash is coming, the crash is coming. And it's 2015, 16, 17, 18, 19, 20, and there's been no crash. There's a couple of factors that affect real estate, and those things haven't affected the current markets. And what I mean by that is, just think about it like this. There's been a pandemic. Real estate prices have continued to go up, at least in the Seattle area. Record high unemployment. Real estate prices have continued to climb. Record high unemployment. Real estate prices have continued to rise. You can't, for investors, you cannot evict somebody. You cannot raise rents on somebody. Real estate prices have continued to rise. So clearly the factors that we thought that affect real estate don't affect real estate. You would think evictions would affect real estate, that if there's a higher eviction rate, the fact that you can't evict somebody, you would think that a duplex that you're trying to buy, but in your state, or federally until December 31st, but in your state it could be extended, that you can't evict somebody living in there, and you can't buy that property to add value to it, to increase the value of the property. Because most investors, that's what they do. They buy a fourplex, they go in, they raise rents, they improve the property. You can't do that now. You can't raise rents on anybody. You can't evict somebody. So there's no value add opportunity. Prices continue to rise on multifamily. So clearly that's not the factor. So what is the factor? What is going to eventually bring real estate prices down? And in my personal opinion, it has to do with the lending. And even now, people are saying that the lending is severely harsh. Like, banks are not just lending to anybody. It's strict, and I fully agree with that. They learned from 2008, and the lending is strict. But I still would say that people are getting loans, and interest rates are severely low. And the fact that interest rates are so low is what's keeping the housing market above the level that it should be. And so, in my personal opinion, it comes down to interest rates. They released the article. I'll probably link it down below somewhere. But they said that the Fed, even with a Biden election victory, they said that the Fed wasn't going to lower interest rates, or plans to lower interest rates till 2023, 2024. So with that being said, so even with all these other factors of an eviction crisis, record high unemployment, people working from home, so they're fleeing the city, fleeing New York, fleeing LA, it hasn't brought in prices down. It hasn't brought in rental prices down. It hasn't brought in anything down. Anything that, like, just think about it like this: if a pandemic can't bring the real estate price down, which we thought would, then what will? You know what I mean? Like, this bubble, in my opinion, it could be everlasting, could be forever. It could go till 2022, 23, 24, 25, 2026. People out here just trying to gauge the market to try to say, hey, when do I jump in? And I think a while ago, I think it was from Mark with Invest for More, where he was like, investors invest in all markets. And he was like, in a low market you invest, and in a high market you invest. And in a high market, you're doing a lot of flips, and then buying also certain rental properties that you find. And in a low market, you're buying a lot and you're not flipping that much because you're not getting that much return, but you're buying a lot of property. So you're always investing, always moving. And so that was a good point that he made that, really stuck with me. Because this market, a pandemic could bring it down. Right now, honestly, it just relies on interest rates. And I don't think interest rates are going to come down till 2024, 25. Even then, when a market shifts, you would think that the prices would decrease instantaneously, and they do. Sometimes it's 5%, sometimes it's 10%. But to get to the bottom of the market, it takes another 3 or 4 years. So add 3 or 4 years to 2024 or 2025. Think about that. You know what I mean? And so you have to be constantly investing, constantly looking for great deals. If it's a high market, be selling, be flipping. If the market is high, then try to find off-market properties and sell high. And there's not a lot of properties to hold on to because they're too expensive. But hey, make your money that way. You still should be investing. You still should be, an active investor even in a high market. But the point of this video was that all these gurus talking about when the market crashed, they're just alarmist. And they're sitting there telling you that they got a crystal ball. Nobody has a crystal ball. Nobody has a crystal ball. No one knows what's going to happen. Even me, when this pandemic hit, I was like, man, I guess this is what we were waiting for. Here comes the market crash. I didn't think it was going to be, where people were going to be locked inside their houses. No one could have predicted that. But no one could have also predicted that prices were going to go up. That makes no sense. Nothing adds up. And, you can call on as many economists as you want, and they can't even explain it to you. The only thing that you can explain is interest rates. Interest rates are dirt cheap, so housing stays stable. But what I do want to end with on this video is that this bubble could keep going till, late into the 2020s. But another thing that affects this bubble is supply and demand. Even during and that's another reason why. It's like sometimes it's a really complicated equation, and you don't know what side of the equation you're on. You're trying to figure things out, and you really don't know what's going on. So sometimes it's like a really complicated equation, but sometimes the answer to that equation is the simplest of things. And in my opinion, I think that's what we're down to. And the answer is supply and demand. When there's a lack of people wanting to buy homes, prices will drop. Even during a pandemic, the demand did not drop at all. It actually increased. People were at home. I guess they were they said Redfin and Zillow were receiving record high viewership on their pages during the pandemic, which is crazy to think about. People just looking for buying new houses. And here's another thing: people were sitting in their crappy houses wanting to buy another one. It's crazy how things work, where you would think that if there's a record high unemployment, who's buying these houses? But you got to understand, you got to stay with inflation. You got to stay with the population growth. There's a lot of tech jobs that are paying a lot more. So even though there's a huge gap between the rich and the poor, and the top 10% and the poor, the middle class is still shrinking, but there's still a lot of people getting paid out there. So that's why they're pushing the market higher. But yeah, it'll come back down to supply and demand. And when will that demand of real estate go down? I don't see it going down anytime soon. There will always be people looking for houses. As long as people are getting the salaries that they're getting, as long as tech corporations are paying their software engineers and whatnot, and pushing this, forward, there will always be a demand for housing. And even something like a pandemic can't slow that down. So yeah, I think I'm going to title this video, the recession's not coming for another 10 years. Something crazy might even happen in the fact that there might be a stock market crash. There might be an actual recession in which real estate prices continue to rise. Like, this is the type of economy we're in, to where economists can't make sense of it, to where people will lose their jobs, record high homelessness, and housing prices still continue to rise. Like, and another thing is, once again, back to supply and demand. In 2008, there was builders on builders on builders who were just building homes and pricing them ridiculously, and people were still buying them. But the problem was when September 2000 or October 2008 hit and Lehman Brothers fell, it wasn't instantaneous, but it was basically instantaneous, where the builders stopped building because they stopped getting money. And when they stopped getting money, they couldn't build any property, and they just left their construction sites half built, half not built. And so during this pandemic, the banking actually got stronger. Lending actually got strong. We have record high refinances. We have record high HELOCs that people are pulling out. You know what I mean? So banking actually was stronger in this pandemic. So the housing market rests on supply and demand and banking. And if you have record low interest rates, and you got people that are continuously wanting to buy houses, then prices aren't going to come down. And so, with that being said, it comes down to those two things. And so if interest rates don't lower, which I don't see lowering till they can't lower it. If they increase interest rates, and here's a rule of thumb to follow, and write this down. Every % of interest rate that goes up, 10% of housing values drop. That is known. That is in every single market. That is just the truth. So, knowing that, if interest rates rose, if they were at 3% today and they go to 5%, you're talking about a 20% drop in market. Now, this isn't a crash, but it's a drop in market values of homes. But that's still not going to get people underwater on their homes. That's still not going to cause a recession. That's still not going to bring housing to what it was in 2010, 11, and 12. So that's another thing. Like, it would have to be a combination of interest rates going up and demand going down, and I just don't see the demand going down, period, and point blank. The demand is not going down. So that's my video for today. That's my thoughts for today. So when you on YouTube and you see all these videos of these real estate gurus and just financial gurus talking about a real estate crash, just know that they're doing it for the views. They're doing it for just to be alarmist, to plant fear. I think you should be aware of the situation and understand that what actually dictates real estate prices. And even I'm learning, even in this pandemic, I thought that, things wouldn't be like this. I thought, hey, the crash is here, pandemic's here, stock market's going to crash, and then it didn't happen. And it even shocked me. I did videos on the pandemic and unemployment and how I thought that the market was going to adjust. And even then I thought, hey, 6 months from now, maybe we're not feeling the effects now, but 6 months from now, no. Prices still continue to rise. It basically becomes, right now, it's a supply and demand and banking issue. If interest rates, and they can't raise interest rates and the demand isn't going to go down, housing will increase for the next 5 to 10 years. And that's shocking, I know. But we might see a recession in a different area, such as stocks, unemployment, just other areas where we didn't think that we would see, a recession, but the housing will still continuously be strong. That's my video for today. Something to think about. Comment, subscribe, have a lively discussion in the comments. Thumbs up my video really helps my video, and share this video. If you agree with me, disagree with me, send it to a friend, share it on social media, and let's talk. All right. Have a good video. I'm gonna go get this workout in, and have a good one, guys. Bye.